The following is brought to you by goldseekmint.com. Silver and gold bullion directly from the mint. goldseekmint.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Sprott Symposium and very pleased to be joined by the CEO of Timmins Gold Corp, Bruce Bragagnolo. Welcome, Bruce. Great to have you here.
Vanessa, good to be here.
Now, Bruce, you've had a bit of a shake-up on the board recently. Can you give us an update of what's transpired?
Yes, we had a shareholder that wanted to see some board change. And as a result of that desire for change, we have brought on, we found 4 directors from a search that we conducted. And we also agreed to add 1 director from the slate that he had put together. And our AGM is coming up next Thursday, the 31st of July. And we've agreed on the slate, and I think we're going to have a very competent, qualified, independent board going forward. I would like to say that I thought our board was independent in the past. Certainly, they've acted independently, and I'd like to thank them for all of their service for the company, helping it get to where it is. But I do think we have a very strong board going forward as well.
Excellent. You founded Timmins Gold about a decade ago. What have you learned along the way?
Yeah, it's funny how fast time flies. You spend the first few years just trying to gain credibility for the company. And all of a sudden you find out that you're 9 years into it and you wonder how the time went so fast. The first few years we were trying to get to production, which we managed to do in 2010 after a 2006 IPO. And we've been ramping up at a rate of 30% a year ever since. Now we have reached steady state production or close to it, but we still have things we'd like to do to improve things at the mine, improve operations. And now we're a 125,000 ounce a year producer, or in that range, and we're always looking to improve things.
And Bruce, what would you say Timmins does differently than other miners out there?
Well, one thing we've done is we've always recognized the strength of our Mexican team. Arturo Bonias is a co-founder of the company along with myself, and I think we've recognized the talent that is in Mexico, especially with Arturo. Arturo's a very good economic operator, and as a result of that, we've had a real synergy between the two countries and the operating team and the management team in Canada. So I think we recognize each other's strengths and weaknesses, perhaps, and we make sure that we cover each other and that we support each other.
Now, Century Investments brought Timmins, I guess, a perception that the company could be a takeover target. What's your take on that?
Well, we've been a takeover target since we started production. To varying levels, but it certainly lit up the switchboard at the office with incoming calls from other corporates. So, we've had a lot of people in our data room recently, and we'll see how that works out. But just because there's interest doesn't mean you're going to get a sale. We'll have to see what happens over the next few months, I guess. I mean, we've always been for sale at the right price. We're just wait to see if we get an offer.
Now you have $44 million in cash from ongoing.
More than that now, but we'll put our production numbers out next week.
Okay.
Yeah, or actually our financial numbers, yeah.
And now, are you looking to expand or maybe make some acquisitions?
Well, we're always assessing the landscape. With our new board coming in on July 31st, we're going to do a complete review of all opportunities. And out of that, we'll make an assessment of how to proceed going forward.
Now, you've managed to reduce costs at San Francisco. Are you still working on reducing costs there?
Yes, we're always looking at reducing costs. We started on a cost reduction program probably a year before most companies did.
Right.
And we realized that the way to improve our margins in a big way was to reduce our costs. Also, with our declining grade profile, from 2012 to 2014, we had to find ways to reduce our costs. And there's a number of ways to reduce costs. The first is the inputs. You have to look at your your chemicals, your consumables. So we've taken a lot of steps to reduce our costs that way. Unfortunately, the spike in prices has now become a bit of a drop, and we're seeing that we're getting lower consumable costs. So inputs are one thing.
Yeah.
The other thing to look at is efficiencies. By increasing our crushing capacity, we've spread the costs of crushing over more ounces. And then recoveries have been improving. We're looking at every way we can to reduce our costs, spreading the cost of more ounces over fixed costs, for example. We're looking at our fixed costs versus our variable costs. So we're always looking at ways to improve. We've taken a number of steps at the mine. We've expanded our crushing circuit. We've got a smaller crush size. We've got new carbon columns we put in a few years ago. We put in a better carbon extraction circuit. So many ways to reduce costs, and we're working on all of them.
So you're one of the first movers in the sector to start reducing your costs actively.
Well, we started 2 years ago. I think everybody's looking at reducing costs over the last year. We did it before the price of gold dropped, but everybody since the price of gold dropped has been looking at reducing their costs.
And you've managed to continue adding to your reserves every year despite increasing production. How do you manage to do that?
Just keep drilling. What we're doing now is running an exercise. We added about 1.7 million ounces of inferred to our resource last year. And what we're doing now is we're running a simulation to see what the mine life would look like if we added those ounces into the mine plan. And we'll have some idea about that the next month or so. That will then tell us where we have to drill to bring those inferred ounces into reserve ounces, and that'll be the next drill program that we undertake.
Now, Bruce, how are you balancing cost reductions with ongoing property development?
Well, we just announced a $5 million program. We did cut back last November on our drilling to meet our cash flow requirements. But now that our cash flow is doing better, we don't have any big capex expenditures this year. It freed us up to do a regional program. So this is a regional exploratory program. We do have some high priority targets, but this program was it was designed to balance out our desire for internal growth with our cash requirements.
Now, a lot's been made about the new royalty and taxation that's happened in Mexico. What's your outlook on the country now?
Well, I still like Mexico as a country. One of the big things in Mexico is the labor costs are low. Okay. Diesel is subsidized. You've got good infrastructure in most areas. The impact of the tax on us is about $4 million a year. So that's manageable for us. I would rather it wasn't there. I think it did look greedy at the time, and I think it still looks greedy. I think I think the tax was poorly timed and poorly implemented, and I think that right now it doesn't look good for Mexico to have the tax on. But overall, I think that the Mexican government realized that Mexico is a very good jurisdiction for mining, and that there were other factors that balanced out the royalty and the tax, and so. I don't think we're going to see a reduction, but I think that the timing of it was very poor. They caught a trough in the market and they put a tax in at the wrong time. So we'll have to see. I think there's still a very strong lobby to see that tax removed or reduced.
It could always be repealed.
It could be, or it could be reduced somehow, yes.
What do you see happening with gold prices?
You know, I've kind of given up on prognostication on the gold price. I was right for a long time, but I've been wrong for the last couple of years. My thought is that we do have to see higher gold prices to make gold a more attractive investment. I really, I have my own views about gold. I think that right now we are seeing a concerted effort to keep the gold price down. I think that with all the political unrest, we're seeing that gold should be higher, but nothing seems to affect the price these days. So, I think I'm an optimist. I always thought that gold should be at a higher price than it is today, just based on inflation. But when you look at the way there's some big money against the gold trade. So we're running our budgets at $1,300 and hoping for higher prices.
Awesome. Well, thank you so much for stopping by today, Bruce. It's great to see you.
Thank you very much.